Good morning this Monday, the 13th of January. I'm Grady Wolf, market analyst with Bell Direct. Wall Street closed sharply lower on Friday as a hot jobs report out in the US dampened expectations for further interest rate cuts out of the Fed this year. The Dow Jones fell 1.63%, the S&P 500 lost 1.54%, and the tech-heavy Nasdaq ended the day down 1.63%. In December, US payrolls grew by 256,000, which was well above the 155,000 economists were expecting. While this strong jobs report is a good signal of a robust economy in the US, it is not good for market sentiment on the rate cut front, as a strong labour market indicates and leads to higher income and consumer spending, which in turn drives inflation higher. The negative sentiment in the market flowed into the European region on Friday, with markets in Europe also closing the day lower. The STOXX 600 fell 0.83%, Germany's DAX lost 0.5%, the French CAC slid 0.79%, and in the UK, the FTSE 100 ended the day down 0.86%. Eurozone bond yields also rose on Friday, which pressured equities in the region. Across the Asia region on Friday, markets mostly fell as real household spending in Japan declined 0.4% year-on-year in November, while average real household income rose 0.7% in the same period. Japan's Nikkei fell 1.05% on Friday. China's CSI index, lost 1.25%. Hong Kong's Hang Seng fell 0.95%, and South Korea's Kospi index ended the day down 0.24%. Locally on Friday, the ASX 200 fell 0.42% as all sectors aside from materials stocks ended the day in the red, led by financial stocks declining 1.17%. The miners had a much-needed relief rally on Friday following days of depreciation on the back of a rise in the price of iron ore on Friday, while the banks took a hit, or the biggest hit on the market, amid broker downgrades within the sector. Star Entertainment Group fell a further 15.8% on Friday, extending heavy losses into a third straight session as investor concerns grow over the future of the embattled casino operator. Insignia Financial, on the other hand, rallied over 2% on Friday on reports a third bidder in Brookfield is weighing up a bid for the superannuation and wealth giant. On the commodities front this morning, oil is trading 3.6% higher at $76.57 a barrel. Gold is up 0.6% at $2,685 an ounce, and iron ore is flat at $98.09 a tonne. The Australian dollar has further weakened by 61.48 US cents, 97 Japanese yen, 50.535 British pence, and 1 New Zealand dollar and 11 cents. Ahead of the first trading session here in Australia for the new trading week, the SPI futures are anticipating the ASX will open the day down 0.86%, tracking Wall Street's losses on Friday. And now let's dive into some trading ideas for your consideration today. Bell Potter has downgraded the rating on Avita Medical from a speculative buy to a hold, and have reduced the price target on the company from $4.60 to $3.50 after the company updated its guidance for FY24, with Q4 revenue now expected at $18.4 million US, which is well below the previously issued guidance range of $22.3 million to $24.3 million, amid a weaker response than expected from the recent launch of Resell Go. And Trading Central has identified a bullish signal on JB Hi-Fi following the formation of a pattern over a period of 23 days, which is roughly the same amount of time the share price may rise from the close of $96.40 to the range of $101.75 to $103, according to standard principles of technical analysis. And that's all for today. Have a wonderful day and happy investing.